Good afternoon, everyone. Curtis Ray here from beautiful Gilbert, Arizona for another edition of All Things Infinite Banking 2.0, how you get your money triple compounding. It is really cool to get money earning compound interest for you, but if you can discover ways to get it double compounding and triple compounding, that in my opinion is the fastest way to achieve financial freedom. So today we're going to spend about an hour together. We're going to go over something I've done over the last 11 going on 12 years now of my own money and how it's been able to produce me a very amazing lifestyle of financial freedom to do what I want, when I want, with whom I want. And ultimately, that's what I want for each of every one of you. It does take time. It does take discipline. It takes a lot of work, a lot of focus, a lot of different things that you're going to have to put in some hard work. But if you're willing to learn about it, put in the work, ultimately, financial freedom is available to every single person. So super excited to be here today. Anything you guys need, please write in the comment section if you have any questions at all. I will be going live question and answer at the end of this. So if you would like to ask a question, feel free to write it. I do have a team who will be answering it, or at the very end of this, we will be going live. So either way, we will get all your questions answered. We want to make sure you have every resources possible and necessary in order to start making your best decisions. So many people make financial decisions without actually knowing the rules of the game, without even knowing the details or what's available to them. So today we want to go what's available to you, what's required to get that, and then ultimately build a plan around that. So without further ado, we're going to get rock and rolling. This is Infinite Banking 2.0, how you get your money triple compounding. My name is Curtis Ray. Let's get rocking and rolling. That is my beautiful family right there. I am married with 5 amazing children. Money is not taboo in our house. We love talking about it. We love joking about it. We love talking about compound interest and how, it's just one of those things that if you can be disciplined and you can give it time, it works for every single person. Compound interest is money making money on top of each other and getting faster and faster. So basically stacking little wins on top of each other. And I tell my kids, man, you guys are in such an amazing position. I didn't start my compound interest strategy till I was 33. They're starting it when they were newborns. Luckily for them, I've been able to start little accounts for them and they're out there rocking and rolling. But they also know the moment they make money, what do? They save some of it inside of compound interest. Few other things about me. I am the inventor of the MPI strategy, the founder of MPI Unlimited, over $200 million in business revenue in the various business ventures I've done. 2-time best-selling author. I am TikTok verified. I used to do a lot of TikToks. We're thinking about getting that restarted. Anyone who's followed me on TikTok, we're thinking about it. I've been waiting for Edison and Lance. I know you're both on here. Still waiting. It's been about 2 months now. Let's get that rocking and rolling. But if anyone who would like to learn a little bit more about my story, how I got here, why I'm so just over the top when it comes to compound interest and how it works and how you maximize in your life, I'd like to invite you to follow me on social media. Text me right now the word Curtis to the number 20500. I am also going to give you a special invitation. My email address will come to you. So when you text Curtis to the number 20500, I'm going to send you my email address. With that email address, you can send me an email anytime you want. What I like to do is give an invitation that if you have any hard financial decisions you're making, there is always a compound interest way of making that decision. Always. There's always the mathematical way of doing it. Sometimes emotions get the best of us. Sometimes we just want something even though it doesn't make financial sense and various other things. But if you would like to send me an email, you're going through something, you're struggling making the right decision, or even knowing which decision is the right decision, feel free to email me your situation, what you're going through. Do I pay off my house? Do I get a 15-year mortgage? What do I do here? What do I do there? I would be willing to look at it and give you my best advice when it comes to how compound interest works. So once again, text Curtis to the number 20500. I'd love to be part of your journey. I've done a lot of really cool things when it comes to money. I'd like to help explain that, give that knowledge to you free of charge if you would like to accept that. So we're going to talk a lot about compound interest tonight. Compound interest is the 8th one in the world, the most powerful financial force in the universe. He who understands it earns it. We've got to understand it. It is the foundation of every financial decision you make moving forward. I want you guys to start making financial decisions thinking one thing. Does it enhance or diminish the compounding of my efforts, of my money, of the various things I want in my life? If you can start making decisions like that, then life gets really simple when it comes to money. Because you start thinking, okay, is this accelerating my future? Is it making my future going to be in a much better place than it is today? Or is it diminishing it? And there's typically a pretty objective answer there. It is black and white. That is the compounding way. And maybe this is the emotional way, or maybe this is my vice, or maybe the whatever various things that we may have in our life. We want to start directing our thoughts and our actions to the compounding way, because that produces the results we're actually looking for. Because that right there is what compound interest looks like. It is slow and steady wins this race. It is put in a little bit of consistent effort over and over and over, and the results accelerate. That's all you got to do is show up. You don't need a home run. You don't need a grand slam. You don't need to be tall, dark, and handsome. You don't need to do anything but put in a little bit of good effort every single day. If you are committed to do that one thing, which is the hardest thing to do, is consistent effort, all of a sudden you get the compounding effect. Little stacks, little wins stacking on top of each other over and over and over, and then accelerates the results. Everyone read that quote right there. I love this quote. The most valuable math you can learn is how to calculate the future cost of your current decisions. What are you doing right now? And what effect will that have on you in 5 or 10 years from now? Not what effect it will have on you tomorrow. Because when we start making decisions for instant gratification and how we get the best result right now, regardless of what it looks like in 5 or 10 years, most often than not, it's not your best decision. Extreme dieting, working out 8 hours a day, crossfitting, doing the various things that give us that instant high. But ultimately we fizzle out, it's unsustainable, and we don't achieve the result we actually want. But slow and steady always wins. If someone came to you and said, I came to you and you're my coach, and I say, hey, I want to get in really good shape. I want to be more healthy. There are some schools that are going to say, hey, go on extreme dieting, cut out this, do that, work out 10 hours a day, et cetera, et cetera, et cetera, because it feels cool and it's really cool and they make TV shows about it. But the people who actually win the game of being healthy are the ones who drink a little bit more water, walk a little bit, that turns into a jog, that turns into a run, a little bit less sugar, a little bit this, a little bit that, and then all of a sudden it naturally and organically compounds. That's what's amazing. I don't know, a lot of you know this, that I've been running marathons lately, but I started off running 2 miles and then it turned into 3 miles. And the crazy part is after a couple weeks of running a couple miles, the 3 miles took the same effort as the 2 miles because it just naturally happened. And then it turned into 5 miles and 10 miles and 15 miles and then 20 miles. And even 20 miles isn't even that hard anymore. I know that sounds kind of crazy. It's about the same mental and craziness as running 10 miles or 5 miles. But it was the 2 years now of every single day, day in and out, putting in the same effort. But the effort gets bigger and the results of that same effort get bigger and bigger and bigger as the compounding effect takes place. So we really want to learn about this graph right here, because what's special about this graph is it never goes backwards. It is just little wins consistently over and over. Raise your hand or give me a thumbs up if you believe that you could put in a little good effort every single day. Boris, there's some people waiting. Can you put in a little bit of effort every single day? The answer is yes. Every single one of us can put in a little bit of good effort every single day. So why don't we? Well, some people forget. Maybe a little lazy kicks in, motivation, whatever. We've got to find a way to go choose. Find 2 things in your life right now. What are the 2 things you've been thinking about? I want to lose weight, or I want to this, or I want to that. I want to save money. What are those 2 things that have been nagging at you? And find little things you can do to achieve that. Nothing big. If you say, I want to lose weight, and then you say, I'm going to cut out all sugar, all soda, all this, and run 5 miles a day, it's not going to happen. It just will not happen. But if you say, hey, I'm going to replace, maybe I drink 4 sodas a day. I'm going to replace 2 of those sodas with water. I'm still going to drink 2 sodas, but I'm going to replace 2 of them with water. And do that for a week or 2. And what will naturally happen is it will go 3 to 1, 3 waters with 1 soda. And then it'll naturally happen, you'll go 4 waters and maybe half a soda. There may be soda every now and then. Those are the types of things. I want to save a little bit of money. I'm going to save $5 today. Regardless, I'm going to save $5 today. And then all of a sudden you're going to be like, oh yeah, that was kind of easy. I'm going to save $10 today, or 15 or 20, and so on and so forth. So find 2 things. That's a little challenge I want to get you, each and every one of you, is find 2 things in your life that you have been thinking about to improve on. And then go find little tasks inside of that that you know you can accomplish, that you can just do it. It is not going to take a lot of effort, but it will take a little bit of effort. And start doing that every single day and watch what happens. The phenomenon of compounding is going to arrive in your life, and it's going to be one of those beautiful things you'll ever see. When you learn about compounding, it will be the most important financial knowledge you'll ever possess. When you start a compound interest account, it will be the most important asset you will ever own. And be a passenger, not a spectator. So many people point, oh, they were born rich, oh, they're lucky, or they have a business, or all these things pointing at other people. Just be a passenger. Jump on the train, let it pull you along. Your only job is to put in a little bit of good effort every single day. And compound interest is for everyone. But so many of us give up right there. I have so many people who start a amazing compound interest strategy and they call me in 1 year or 2 years and say, Curtis, I haven't made a ton of money yet. What the heck? And I go, that's how it's always built. When you have something securely compounding, it cannot start fast. It is not mathematically possible. It has to be slow and steady, stacking little wins as time goes on. So be a little bit disciplined. Wait for it. Know this is a 5, 10, 15-year game. But if you can do that and start putting in these little efforts over time, all of a sudden in 10 years, you're right here. And in 15 years, you're up here. And in 20 years, it is growing so fast, you can't outspend it. That is what we want. That is freedom. That is true financial freedom. To do whatever you want, whenever you want, because you have enough money compounding for you to live the lifestyle you want. Don't give up too soon. In all those goals I talked about, whether it's your health, your wealth, your relationships, your business, anything in life, don't give up too soon. Give it a couple years minimum. In a couple years minimum, if you're not seeing any results, maybe then you can pivot. And you didn't lose any time. You didn't lose any effort because you're doing good things. It's always about doing good things. And good things begin to compound no matter what good things you're doing. So let's make that happen. So I'm going to show you guys a little bit of something interesting about my own life. I want to show you that in 2014, I had $0. Zero. I had a really bad day. A lot of you know this. My day was a November 1st of 2014. And on that day, I decided I was going to do something different with my life. I was going to begin to slow and steady a lot of money. As much money as I can make, I was going to put a lot of it away to slow and steady wins this race. And then I started discovering some rules of the game. That when you start saving money, you also have the ability to double compounding. And then when you save enough money, you even have the ability to triple compound. And so I started working this over the last 12 years of my life, a triple compound strategy that has brought me something that I never even dreamed I would have. And this is what it looks like now. $42 million of life insurance. If I were to pass away, my wife and my kids are protected. I know it's a little bit excessive, but that's kind of the rules of the game, and I'll explain that another day. But $42 million of life insurance. When my wife sometimes looks at me and says, hey, you need to behave or else, sometimes I'll listen. Sometimes. Because $42 million is what weighs on my head. I got to be good. But more importantly, what does it do for me right now? I've got $7.2 million of money compounding for me. This started at zero 12 years ago. And now it's $7.2 million of money securely compounding for me, building my best future. But then I was able to double compound it and even triple compound it. And right now have $5.1 million of someone else's money accelerating my money. How powerful is that to know that once you begin to compound and then you have access to other things, you can not only have your money compounding, you have someone else's money compounding. And when those two things come together, financial freedom is available to any person who wants it in about 15 years or less. If you're willing to do the hard work for less than 15 years, you're going to be in a position in your life most likely that is going to be highly financially free. And that is what we want for each and every one of you, is to understand how to protect your money, how to compound your money, and then how to get your money triple compounding. What that looks like ultimately is called OPM, other people's money. When you use other people's money, OPM or OPR, I like OPR a lot, other people's resources. Resources include knowledge. You're here right now, hopefully getting a little bit of knowledge. Other people's money, other people's assets, other people's opportunities, other people's communities, all types of things. So if we can start learning how to use other people's money, this is what's called Infinite Banking 2.0. When your money and someone else's money is securely compounding together to accelerate your day of financial freedom. And then when you have multi-layered leverage or multi-layered OPM, that is how we do it in less than 15 years. Most people, and I'm going to say this from my own experience, most financial advisors that I know believe in their heart and through their training and their licenses and all the types of things out there that you need to save between 30 and 40 years to build something of financial freedom. You start a 401k and IRA when you're 21, 22, 25 years old, and you retire when you're 65. We've all heard the story, right? 25 to 65, that's when you go right off in the sunset with a $40,000 or $50,000 a year. It takes 40 years is what they're taught and what they often believe by just saving money. But if you can save money and understand OPR, OPM, Infinite Banking 2.0, that can be cut all the way down to 15 years or less. That is what we want for each and every one. It's so powerful, so amazing. And so we're going to go over, we've got about 45 minutes left. We're going to go over what this means, how you use someone else's money to build wealth. Unfortunately, very few people do this because we get trapped here. We get trapped in this little game called no risk, no reward. We love it. It feels good. It's exciting. I've done it myself. I've done it so many times. We've all done it, right? That sounds amazing. That's what I want to do. It goes up, it goes down. Roller coaster, home run, strikeout. Craziness. But this no risk, no reward, in my opinion, is one of the worst philosophies ever spewed on humanity. It is really backwards. The whole thing is backwards. Financial advisors will often tell you, no risk, no reward. You've got, while you're young, you got to put yourself at risk. That's exactly opposite. When you're young, you have so much time. Just let compounding do all the heavy lifting for you. Just let it happen. You've got time. That's the one thing is, if you have time, it only takes a little bit of money and a lot of bit of time, and wealth is inevitable for anyone who is compounding money. But we've got this idea that, oh, we're young, we can take risk. You do not want risk in your life. If you can start eliminating risk and maximize reward, that is how you produce security, confidence, and financial freedom. I always say that the saying shouldn't be no risk, no reward. It should be eliminate risk, maximize reward, or eliminate risk, be content with the reward. Meaning, if you can remove the risk, then maximize what's available inside of that secure bubble that you just created. And then be content with it because you're now compounding. You've eliminated risk and let money make money without the risk of losing, going backwards. And so we've got to find a way to get out of this. We've got to find a way to bypass this. If you can bypass this idea of instant gratification, all of a sudden it's really easy to make really good decisions. When you're not thinking about, oh, I want to be rich tomorrow. I want to be retired in less than 1 year. Well, that just doesn't work. It very rarely works. And one time on Instagram, someone says, I bought this stock and it went up 100,000x and now I'm rich. All the SpaceX people, super freaking cool. It does happen every now and then. But for most people, that opportunity does not come. And then when it does show up, the moment you heard about it, it's way too late. If someone comes to you and say, hey, this really amazing thing's about to happen, it's way too late. It's way too late. That's already happened. So let's bypass this no risk, no reward and find ways to actually produce financial freedom. And so, Boris, I don't have a book. Can you grab me a book real quick, Boris? I end up writing this book right here. Everyone Ends Up Poor. I like to hold one here, so I'm going to act like I'm holding a copy of my book, Everyone Ends Up Poor. Boris always has one right there for me. There it is. Everyone Ends Up Poor. Let's go. So this book right here, best-selling book, Everyone Ends Up Poor, breaks down why what is compounding, how it works, what is no risk, no reward, how they work together, all the various things that come, and why around 99% of the American population downsize in retirement. Think about that. We live in the most abundant, amazing country on the planet. And still, the people who have 401ks and IRAs and even real estate rentals and all the whole 9 yards, only around 1% end up in a position to do what they want, when they want, wherever they want, with whomever they want. Around 99% end up having to downsize or live on less income than when they're working. And sometimes that's not a bad thing. You're making $150,000 and you can retire at 80, and that's enough. It's enough. It's always enough. Most people have enough. But the goal is to be financially free. The goal is to be able to travel to Italy if you want to be able to go spend time with your grandkids, start a nonprofit, the various things we want to do that fulfill us. But in order to do that, you have to be in a financial position to be able to afford that lifestyle. So I wrote this book, Everyone Ends Up Poor, and breaks down exactly why, in my opinion, around 99% of the American population never make it. Even the ones who do the right things, or at least the ones they were told to do. If you would like a free copy of Everyone Ends Up Poor, I'd love for you to read it. It's only 110 pages. It doesn't take very long. It takes about 3 to 4 hours to read. And I believe you will learn more about why this retirement crisis is happening, that few people ever actually achieve financial freedom. And it's because of one very specific reason: risk. Risk is the enemy to wealth. Risk is not what you want in your life. If you find a way to remove risk, then it starts becoming an equation where you can actually achieve financial freedom. So if you'd like a free copy of this book, text me the word book to the number 20500. Pull out your cell phones, type in the word book in the message, and then send it to the phone number 20500. If you do that, I will send you the ebook and audiobook free of charge. And go on, spend some time. It's about, like I said, less than 4 hours, and you will learn why everyone ends up poor. And most importantly, how to become the 1%ers who figured out how to bypass that inevitable downsizing. We don't need to downsize. Let's supersize. Let's make it all happen. So grab yourself a free copy of the book. Text book to the number 20500. So here's the question. We've got slow and steady wins this race, and we've got the exciting roller coaster of investing. Which one's the better option? Because they both have value. If you look both there, they both end up fairly in a similar position in 15 or 20 years. So here's a question for every person on here right now. If you had a choice of slow and steady, secure and confident, and never loses, but starts off a little bit slower, but then accelerates as time goes on and only gets better and better and better as time goes on, or maybe you hit the home run, strikeout, grand slam, strikeout, et cetera, et cetera, et cetera. But they both end up in a very similar place in 10 or 15 years. Which one would you choose? Write in the comment section. Would you choose A, slow and steady wins the race, or B, I'm going for the home run, Curtis. I want the home run in my life, and it may strike out. Which one would you choose, A or B? Boris, can you show up the comments so I can see who's answering? Okay, we've got, okay. Oh, Michelle wants B. She wants to go for the grand slam. No, Michelle, we don't want that. We want, maybe you want that. But here's the thing is, why do so many people want that? Because it's attractive. It's attractive to go for the home run. But as I said earlier, home runs come with strikeouts. And when you end up striking out, what happens? Everyone ends up poor. No, we don't want that. We want that. But it does play a role. I am going to explain in a little bit how these two things can coexist. And if you can get to a position where they coexist, like Jeffrey just said, I want both of them. I like both. But we've got to understand the order of operations. How do we do it where we first build a foundation and then get the investment returns? That is what we call the triple compounding strategy, and we will get there. But we have this. So which one's better? Well, let's go over a few of the most common ones. We got the 401k. The 401k, it's got its benefits. It's got market growth, which is great. We want to grow inside the market. It's got a match strategy in most companies where they fund part of your 401k. So that's cool. Free money is free money. We want to take that. But it has a lot of flaws to it. The flaws include taxable retirement income. You get there, you think a lot of money. Now 20 or 30% of it's not yours. So even if you had $1 million, by the time you use it all, $200,000 or $300,000 of it went somewhere else. That's not cool. It's got high fees often. The national average, I think, is 1.6%. Market risk, low income, the 4% rule, because of that risk, because it's attached to risk most often, it has this really interesting rule called the 4% rule. And then early access penalties. You want to start at 25, 30 years old and retire early? Not in the 401k. It's not an option. And so it's got its pros and it's got its cons. Then we have the Roth IRA. Roth IRA, a little bit different, a little bit worse in my opinion than the 401k because it also has market growth, which is great. The income is tax-free, which is okay. We like that. And it often has low fees because you can go get like a low-cost index fund or something like that with your Roth IRA. However, it doesn't have a match strategy. So you're just using your own money. So if you have the choice of saving in a 401k with a match or a Roth IRA, take the 401k because it's got the match. But it also has often the market risk, the 4% rule, and early access penalties. So Roth IRA has its own problems, but a lot of people use it because it's really simplified, really low expenses. Then we have insurance contracts, guarantees and security. That's the crown jewel. Oh, we're guaranteed and secure. But it also often has really low growth. It's got no access penalties. That's another benefit. You can use it even when you're under the age of 59 and a half. You can retire early, generational wealth, tax-free retirement income, but often has high fees in the beginning years, low growth potential, and then you must qualify. Health does play a very large role inside of these plans. And then lastly, we got real estate. Market appreciation, tax incentives, leverage. You can use someone else's money very easily. The banks will loan off of real estate very easily also. But it's got market risk, a lot of hands-on. You got to be working a lot. And then when you do finally take income out of it, it's often taxable. And so we got all these things. And so I said, hey, I see the pros and cons, right? We all see the pros and cons. So I had this idea in 2014. What if there was a strategy that can include all the pros and eliminate the cons, at least the majority of them? What would that look like? What if we could build something that was really freaking cool, that not only had market growth, had a match strategy, had security and guarantees, had low fees, tax-free income, no access penalties, liquidity, and you could leverage against it and produce generational wealth? What would that look like? If this were available, how many of you would like to learn something about this? Well, that's what I want to know. I just had my bad day. I lost a bunch of money. I have 5 children. There's a lot of things that are very, very important to me. And thinking about this, what about this? After searching around and talking to people, do I go to real estate? Do I go to stock market? Do I go to insurance? I came across one strategy that was really, really cool. A leveraged life insurance strategy. And we call this premium financing. It's a very exclusive type of infinite banking strategy. Inside of premium financing, it's a life insurance contract for guaranteed family protection. We want to protect our family. It also allowed for generational wealth. So, okay, I'm protecting my family. When I do die, generational wealth is part of my history. It's got really low expenses, the lowest legally allowable. Okay, I like that. I don't want to pay a lot of expenses. Guaranteed security against market risk. Okay, now I'm not in the risk of the market. It's now a compound interest strategy. Tax-free growth up to 10% per year. Okay, that's a solid return. It's not that great, but it's at least solid, tax-free, and secure. I'm getting all the different things I want, and then legally protect against liens, lawsuits, and creditors. So all the things that I basically just asked for, there is actually one strategy out there that almost produces all of them. But what makes it really powerful is bank financing. They call it premium financing. Someone financing your premiums. So basically they're financing the amount of the money going into your policy. And through this match strategy, basically a bank matching your premiums, you save money, they'll save money, and it'll go together. You can have a life insurance policy that produces up to 15% interest annually. Think about that. The stock market historically has averaged around 10. So you could have a life insurance policy, if you can qualify, that could potentially outproduce the stock market while being tax-free, while having guaranteed security, while being available, legally protected, and all the various things that we're trying to accomplish, all inside of one strategy. But there's one problem, 2 problems. First problem is you don't have any liquidity. The bank owns it. Until you pay the bank back, they have a lien on it. Okay, that makes sense. They lend you money, you put it in, and it's their money until you pay them back, right? But the biggest problem is this. You've got to have $5 million to participate. The rich get richer because they actually have better opportunities. How many people on this call right now have $5 million? Raise your hand if you have $5 million just sitting around that you could go get some really cool strategies with. Not very many people, right? Very few people have this type of availability or money. And so we're looking at this like, dang, I want all that. 2014, I didn't have $5 million. And so how could I get this? I want the life insurance. I want the family protection. I want the low expenses. I want the tax-free growth. I want to produce up to 15% through the match strategy, all the various things I want. And so because it wasn't available to me, what did we do? We had this really cool idea. Let's build it. Let's build something for everyday Americans, not just the super rich to go make up to 15% with all those benefits because they're already rich. But what about producing something actually available to everyday Americans that can save $500 a month, $1,000 a month, $5,000 a month, whatever their available savings levels are? Why can't they participate in something premium like this also? Well, after about 4 years of working on this, through actuaries and lawyers and insurance companies, in 2017, we are finally given the thumbs up to take this directly to the public. It was super exciting. I ended up creating a TikTok channel, making a ton of videos, going super viral, bringing this to the world. And what was crazy is we tried to bring this directly to the financial advising community and the insurance community. And the majority of them said what? Stay in your lane. No, premium financing is only for the rich. Don't mess it up, Curtis. This is not available to everyday Americans. This is only available to rich. And that did not sit well with me. I wanted the opportunity of A, for myself to participate in it, and B, to bring this available to my friends and family in my community. And so after 4 years of working on this, we were able to bring it to the public. This company right here gave me a phone call. And it changed my life. Changed tens of thousands of Americans' lives, because this company called and said, hey, what are you doing, Curtis? That's pretty freaking awesome. Why didn't we think of that? Taking a life insurance policy and bringing it available directly to the public with all those different features and benefits I just went over. This company is A+ rated, lowest expenses in the industry, allowing for these type of strategies directly to the public. And what it is, I'm going to show you a quick sample of what we've created and how we're able to bypass the bank. Because before, it was the bank financing the match. The bank, you save money, the bank gives you basically a loan against your assets because you're super rich, and then that money goes into the policy. And now you have double the money, triple the money, quadruple the money working for you in compounding. Well, the idea is this. If we're saving money, can't we just become the bank? Can't we be the infinite bank to get a line of credit or an index loan off of our own savings? That was the question. If we're saving money, are we able to double compound off that same money? And the answer is yes. And so I'm going to show you a quick view of kind of what it looks like. This is an example of someone saving $10,000 a year. It's got life insurance protection. It's got the lowest expenses in the industry. It's got market appreciation up to 10%, guaranteed 0% floor. Even when the market crashes, your worst case scenario is you get 0% earnings, tax-free income at any age you want without penalty, and a match strategy that begins in the 3rd year. And I'm gonna make sure you understand that. This match, what we had to do is that rather than for premium financing where the match came in immediately from the bank, this begins in the 3rd year. And what it looks like is this. Imagine that you're saving $10,000 a year. You're committed to 10 grand. That's what you're going to do. I'm going to save $800 a month, Curtis. Perfect. Because of your level of commitment, the slow and steady, I'm going to keep doing it day in and day out. Starting the 3rd year, the insurance company will offer a match of 100% whatever you committed to. So you put in 10 for the first 2 years. They're going to add 10 to your policy year 3. This is not your money, but you do get to keep any extra compound interest that can earn you. So think about that. You now have your money compounding securely up to 10% interest per year, and now you have their money compounding inside your policy. Eventually, they're going to get their money back when you pass away. That's when it gets paid back. But until you pass away, you can have tens, hundreds, even millions of dollars of their money inside of your policy compounding for you. And so what happens is they will match whatever you're doing 100% for years 3 and 4. So you put in 10, they're going to put in 10 and 10. So you see 20 right here. Why does it say 20? Because 10 from you, 10 from them. So 20 is going inside your policy. Then if you continue to be slow and steady, saving that $800 a month or $500 a month or $1,000 a month or whatever you commit to, they'll raise the match to 200% of whatever you're doing. Then 300%, 400%, 500%, 600%, and so on and so forth. So you end up having millions and millions of dollars of their money inside of your policy, producing additional accelerating compound interest. That is all it is. According to your savings levels, they're going to match it. And if you can continue to save and be disciplined and know, hey, this is a 15 or 20 year commitment, that match gets bigger and bigger and faster and faster. And when you have more money compounding for you, OPM, other people's money, financial freedom can be achieved by anyone in less than 20 years. So that's what we want. We want to be in a position that we can be fully financially free in less than 20 years. But you're going to say, but Curtis, you said 15 years. You said less than 15 years. Well, right here, unless you're saving a ton of money, this can produce some pretty awesome results in 20 years or less. This is you saving money plus the match strategy goes together, and then it gets faster and faster. The longer you're in it, the better it works. And then ultimately produce a really, really great financial freedom. I mean, show me anywhere else in the world that you can save $200,000 total, $10,000 a year for 20 years, and have $1.6 million compounding for you, $421,000 tax-free and liquid available for you, and a death benefit of $4.2 million if you were to pass away, all because you committed to saving $800 a month. Absolutely powerful, where financial freedom and generational wealth, generational poverty could literally be eliminated for any person in the world, for any future family in the world, by just committing and starting today. If you put in a lump sum, say you have some assets that you liquidate, or you have some savings and you can drop in a lump sum, the whole thing starts even faster. The match starts in the second year rather than the third year. So anyone who can come with a lump sum, all it does is accelerate. It makes the whole thing faster. In this scenario, this person saves around $700,000 of total money out of their pocket. And in 20 years, they've got 4.5 million compounding for them, 1.5 million tax-free liquid, and a death benefit of $5.2 million. So it just shows there are different levels. You save what you can, do the best you can, and you can always adjust it later. That's one of the best things about this is if you can only start at $500 a month now, start at $500 a month. Start somewhere. I started my policy. The one you saw with $7.1 million in it started at $1,000 a month. And then as time went on, I raised it to $5,000 a month. I didn't even put in a lump sum. And then $10,000 a month, and then $30,000 a month. And so we have this great opportunity of starting where you can, and then as time goes on, you can adjust it according to you got a better paying job, you won the lottery, whatever. All those different things in life, how we get money. And so we want to make sure that every opportunity we have to save money and compound money and get it double compounding through the match strategy. Lump sums make it go faster, but not everyone has a lump sum. So start somewhere, start saving money and get the compounding effect in your life. So back to Jeffrey. Jeffrey says he wants both. He goes, Curtis, I like this compounding, super cool, slow and steady, add the match strategy in this thing, and now we're going to retire in less than 20 years. That's the goal that's my goal for every single one of my clients. Let's get there. But we also like to make good returns. We like those 20% returns, 30% return opportunities that show up, right? And this is where it gets really special. About 2 years ago, 3 years ago, someone came up to me and said, Curtis, I think you're missing it a little bit. You're so fixated on secure compounding and you're leaving a lot of money on the table. There are a lot of really good real estate deals, other business deals that can make you good rates of return, and you can still have some security. You can build in security inside of it. And so we went down this path called Infinite Banking 2.0. How you get your money triple compounding. Not double compounding, because double compounding is really cool. That's what most people are going to do. But every now and then we have the opportunity to triple compound. But it has to be understood that if we're going to merge these two things together, slow and steady, secure compounding plus no risk, no reward investing, it has to be done correctly. It has to be done very methodically, that you understand that this is the foundation and this is the cherry on top. You can't switch them, because if you go here first, you could lose it all, like any investment out there. But if you come here first, it changes the game. And this is what it looks like. Financial freedom in less than 15 years. This thing accelerates faster and faster and faster as time goes on, because you have your money working in 3 places at one time. So what ended up happening, like I said, is you have your money saving right here. You have the match strategy. My friend came up to me and goes, but Curtis, even after me saving money, even after me accepting the match and maximizing the match to the best of my ability, what about all this money right here? This is your liquid side. Surrender value is how much liquidity you have in your account at any given time. So now you have all this liquidity right here. can't I go use that still to go do additional investment opportunities? We've already maxed out the insurance contract. We've got as much savings going into it as possible from our pocket. We've got the max amount of match strategy going out of the double compounding, using the insurance company's money to compound for us. We're already maxed out here, but we still have all this cash value available to us. Couldn't we go then use this for additional investment opportunities, real estate deals, various other things like that? And up to that point, I'd never done that. I never thought about that. I just said, no, I just want slow and steady wins this race. This is too risky, too risky. But I discovered something really cool: how to become the bank. How do you become the bank? Why is a bank the way it is? There are a few rules to the banking. First, they're liquid. Second, they can lend money out. Third, they write the rules of the contract. They do not lend money out without contracts and personal guarantees and collateralization and positions and all the different things they want. They are the ones who write the rules of the game. And all of a sudden it dawned on me, what is triple compounding? It is when we build a life insurance policy with the match strategy. And this is our bank. This is something that's securely compounding, tax-free, available, liquid, and it's our money. We can do what we want with it whenever we want with it. That is our decision, and this is our foundation. And when that happens and you start saving money and you get to a point where you've got $50,000 saved up or $100,000 saved up or whatever amount of money saved up, all of a sudden you become the bank. And triple compounding can become part of your life. This triple compounding looks like this. You now have the opportunity of investing securely and selectively. Remember how no risk, no reward? There's lots of risk when it comes to investing. But what if you wrote the rules? What if someone came to you and said, hey, I need to borrow $25,000 to do A, B, and C, to flip a house or whatever? Okay, I've got $25,000. I'll lend it to you at 15% interest or 20% interest. But I need a promissory note. I need a position on the home. I need collateralization. I need something that protects me, that if you don't pay me, I have recourse. Most people just invest with no recourse, no promissory notes, no anything. But here's the name of the game, is you've got to be one to walk from an investment. So if I go to someone came to me and said, Curtis, I need to borrow $850,000. This is a real story. And I said, $850,000, awesome. What's the rate of return? He's like, I'll offer you 75%. You give me $850, I will give you $1.4 million back in 12 months. And I'm like, that sounds like a really freaking crazy deal. I like that. What's my guarantees? And he goes, there are no guarantees. It's built inside the return, 75%. I'm like, not interested. I'm not interested. And he goes, what do you mean you're not interested? 75% rate of return. There aren't very many deals that give you a 75% rate of return. I go, yeah, but you could lose all my money. I worked hard for that money. I'm the bank now. If you went to a bank and got $850,000, what would they require? Your Social Security, promissory notes, personal guarantees, guarantees by your LLC, collateralization, a position on your home, position on your cars. They would make sure they're 100% protected the best they possibly can. And if you want their money, that's what you have to give up. And he goes, no, I'll go find someone else. But there are very few people in this world that actually have money available. And what's amazing about infinite banking and having your money inside of life insurance, it's available. You have lots of liquidity available to you, and you can get it fairly quickly. So a couple days later, he comes knocking back on my door and he goes, hey, Curtis, what do we need to do? And I go, I require 200% collateralization. If you want $850,000, I need $1.7 million in promissory notes from your house, your cars, your business assets, your airplane, whatever else. And ultimately he goes, okay, and signed over $1.7 million of collateralization and promissory notes. And so in the past, I would have probably just done the deal. Oh, so great, 75% rate of return. And about half the time I lose. I don't make my money back. They don't pay me. They take off, whatever else. In the last 12 years, I've had not one deal not pay me back. Not even a single one has failed on me yet. Because why? I now demand promissory notes, collateralizations, positions, that if they don't pay me, I am going to get my money back one way or the other. And that is when you become the bank, when you start making the rules of the game. And so I want to motivate each and everyone to understand that we can get up to 15% annual returns here, slow and steady wins and joys. This in and of itself can get you financially free in 20 years or less. That's the goal, is that we're saving enough money to be financially free in less than 20 years. When you add in the triple compounding, the triple compounding now allows that to be 15 years or less. Some of you can even be, I'm at 11 years, going on my 12th year, and I've been able to achieve it. So it allows for an acceleration of compound interest. If you would like to learn more about investing and how you get that triple compounding inside your strategy, text me right now the word invest to the number 20500. I'm going to line you up with our Ken Kilday, who's our CFP on staff that has an investment division that we're helping people understand how you triple compound. But you cannot be part of this triple compounding until you've built this. This is where we get it. This is where we build our foundation. This is where allows us to know that our money is securely compounding. So this becomes a luxury. This becomes selective. If someone doesn't want to give us the promissory note, we walk away from it. We don't need it. They need us. And in that moment, when you become the bank and you understand that they need you, you don't need them, you stop losing. And when you stop losing, what accelerates? The power of compounding. So text me right now the word invest to the number 20500. Claudia, you got to send a text message, invest the number 20500. So I want to show you guys how powerful triple compounding actually is. Look at this right here. This was my policy 1 year ago, March 1st of 2025, 1 year ago. I had $5.5 million in compound interest money, compounding for me, and using $3.5 million of someone else's money inside my policy or in additional investments outside my policy. So look how powerful that is. Millions and millions of dollars compounding for me. Liquid $1.3 million. Super cool, right? I started this in 2014, $1,000 a month. $1,000 a month. Start somewhere. And then I got bigger and bigger and bigger as time goes on. But now look, 1 year later, one single year later, look at what happened through the power of triple compounding. March 1st of 2026, 5.4 million went to 7.2 million. 3.5 million of someone else's money compounding for me, whether through the match strategy or outside investments, jumped to $5.1 million. $1.7 million of additional growth and availability and liquidity inside my policy to then go do additional things and still maintain $1.2 million of liquidity. I was able to make additional money and go deploy it in additional investments and the match strategy, all by just one single year. What's crazy about this year is I made more money in my 11th year. This is my 11th year, 2025. I started in 2014. So 2025 to 2026. In 1 year, I made more compound interest than all the years combined, years 1 through 10. If you took all my efforts combined, saving money and compounding, in my 11th year, I made more interest than all those years combined. That is the power of compounding. I want each and every one of you to have an 11th year. You got to believe in it. You got to start. You got to save money. You got to get it compounding. You got to get it triple compounding, so that you look back on June 25th of 2026. You'll look back on June 25th of 2036, 10 years from now, and say, that was the day. That was the day that changed my life. But I'm going to show you something even more cool. Even more cool, because I thought this was cool. I just looked at this the other day. But look at this. March 1st of 2026. It has now been 3.5 months since I screenshot this. 3.5 months. And look at my policy today. I'm going to open up my policy in real time in front of you guys. Here's the website, my policies with mutualofomaha.com. I'm going to sign in. Sign in. Oops. Check this out, guys. Oops. Okay. Remember, I was at 7.16 million in March of just 3 months ago. And now, if it wants to load, come on, come on. We'll see if it wants to load. Our internet's working, right? I'm going to try again. We're going to try again. Sign in. Man, this was supposed to be like this grand finale, and now it's all anticlimactic. Let's go. So I'll just tell you what it says. So we were at 7.1 million 3 months ago. And now I believe, if I remember correctly, 7.6 million. It has had $500,000 of actual growth in the last 3.5 months. So to see it go from 5.4 million 15 months ago to 7.1 million 3 months ago to 7.6 million now, absolutely, like, it might. I'm a pretty open-minded, abundant thinking dude, but to see that happen in real time, to see it actually maturing. So many people ask, how do you know it's going to work, Curtis? How do you know? Because I'm in my 12th year. I'm the poster child. I've seen it from day one. What does it actually look like? Slow and steady starts off here, and then it got faster and faster and faster. And then as things start happening, more and more opportunities began. It doesn't look like we're going to load today. Interesting. That sucks. While we're waiting, I'm going to answer some questions. I think they're doing maintenance. Are they doing maintenance? Dang it. Of course, right now. Trying to count all that money, right? Trying to count all that money. The rich keep getting richer. Kevin, we want everyone, even the poor kid out of West Mesa, Arizona. Curtis Ray, I got 8 siblings. Started $1,000 a month 12 years ago. Now I was in a position in my life that I never even dreamed of, to have that type of financial freedom. Super cool. Where's the money coming from to invest outside the policy? Which column does it come from? The surrender value on an illustration, but in this one, online, available cash value. So this is my additional money. I already have 5.1 million that I've been able to leverage against my 7.1 million. Now it's 5.4 million because I just took another $300,000 outstanding loan to go do additional investments with. But 1.2 million is the availability to go out and do additional investments with. So, okay, well, we're going to try this back at the end of this because I thought it was kind of cool. I can hear some, Boris. So how do I get this? How did I get this? And how do you guys get this? There are 2 rules of wealth that I want to be very, very direct on. The 2 most important things you can ever learn in your life when it comes to money are these. First, pay yourself first. Start saving money as much as you can, as often as you can. It is not a sacrifice. Obviously, I don't want you living in poverty, but any additional discretionary income that's available to you, try saving it. I live by the 50% rule. I have my cost of living, which is, whatever. My cost of living with my 5 children, it costs, I'm going to just say I live a pretty open life, probably about $150,000 to $200,000 a year. So that's going out to eat, going on vacations, things like that. Everything above that, I save 50% of it. So that is called discretionary income. Whatever amount of money that you have above your cost of living is called discretionary income. Or if you have a business, all the profits, all the money above the cost of being in business. I save 50% of it, and the other 50% goes to living a better life, going on more vacations, spending money on various things in my life, expanding your business, doing more opportunities, investment opportunities, things like that. So start trying to save 50% of all your income above your cost of living or cost of doing business. That's what I do and have been able to save a lot of money. And then as you start earning more money, you're just saving naturally. You just already know how much you're going to save. Some of you might have said, well, Curtis, I already live paycheck to paycheck. What am I going to do? I live paycheck to paycheck. So what's the second rule of wealth? Earn more money. That's the easier side of the equation. Earning money is actually more easy than saving money. So many people find ways to spend money, but if you have a W-2, there are ways to earn more money, whether it's overtime, whether it's going to your boss and saying, what can I do to earn more money? I'm willing to take on more. I'm willing to work harder as long as I can earn more money so that you have money to save. You're part of the community. If you're part of Sub2 or Gator or various other communities out there, there are so many amazing people out there trying to help other people make more money. Join a community. Be partners with people. I can't even express how many opportunities I have around me. And I know that those same opportunities are around everyone. So earn more money. And what do you do when you earn more money? Pay yourself first. Those are the two rules of wealth. Pay yourself first, earn more money. Guys, I would like to give you an invitation to schedule a complimentary one-on-one. I've said a lot of stuff. There's a lot of things that maybe you fully didn't grasp, or you want to customize it to your own situation, understand how can it benefit you. I want each and every one of you to have an 11th year. Maybe it's your 15th year, maybe it's your 20th year, wherever it is, where you look back and say, that was the single most important day of my life. These are my professionals, absolutely amazing individuals that are working day in and day out to help Americans learn about how you build an infinite bank 2.0, how you get compound interest, how you get it triple compounding. If you'd like to schedule a complimentary one-on-one, no strings attached, text me right now the word READY to the number 20500. I'm going to send you our calendar. Go on there. Find a good time, schedule a complimentary one-on-one, come ready to learn, come ready to be excited, to talk about your goals, envision your future. What does it look like in 10 years from now? Remember, the most important math you can ever learn is what the decisions you're making right now in this exact moment and how they'll influence yourself 5 or 10 years from now. And if you can start making decisions like that, like I am going to start today and I'm going to focus on what it looks like 5 and 10 years from now, not 5 or 10 days from now. If you can start making decisions like that, everything becomes easy in your life. Text me the word READY to the number 20500, and we'd love to be part of your journey. We'd love to explain things to you, answer all your questions, help you with your hard financial decisions, and we will never ask anything from you in forms of money. We don't charge for our services, but we will ask you not to waste time, to be ready to change your life, be ready to learn, be ready to make those hard decisions. And then be ready to make micro commitments, really small commitments that you know you can do. I'm going to start saving a little bit of money. Maybe I'm going to start off at $500 a month. I want to do 1,000, but I know I can do 500. Then we're going to start at 500, and we're going to get to 1,000 when we get there. Those are the type of little commitments that we want. Text READY to the number 20500. I do go live a lot, guys, and if you would like to come on and ask questions and learn more and hear this again or hear various versions of this presentation I have, I also do a lot of teaching. Text me the word semester to the number 20500. Every time I go live, I will send you a notification that I am going live, and so you can jump on if you want to hear. We're going to start going TikTok live pretty soon, and we'll be telling everyone every time we go live. And various people are going to be doing the TikTok live. It's not just me. There's going to be various people who are going to jump in, say it in their own words. They may teach it a little bit different than I teach it as far as their own words and their own experiences and stuff. So if you'd like a reminder every time I go live, text the word semester to the number 20500, and we will send you a reminder notification every time we go live. It is super important that we understand the power of triple compounding. It is your money compounding, then maximizing the match strategy, and then using investing as the cherry on top. And we only invest when it enhances, not diminishes, the power of our compounding. And if you can get your money triple compounding like I got my money triple compounding less than 12 years ago, each and every one of you are going to look back and say, that was the single most important financial day of my life. The day I understood that security first, and then we compound, always be triple compounding. So thank you guys so much for your time. I hope you're super excited about learning more, custom building your own. Once again, text me the word READY to the number 20500 if you'd like to schedule a complimentary one-on-one, learn, custom build, ask questions and things like that. So are there any questions for me right now? I'm going to go do live question answer. So if you have a question, raise your hand. I will call on your name, and then you can ask your questions and we will go from there. So I am part of Sub2 and 10X Grand Community. Awesome. You got to be part of these communities because there's so much abundant thinking people out there, so many great opportunities. It is quite easy to make money when you understand that you have people around you that already know how to make money, and you just got to kind of ride their coattail a little bit. Just ride their coattail a little bit until you know the rules of the game, and take advantage of those communities. What's the possibility to set up a Facebook group for MPI? Darren, Lance probably has already been working on that. I know Lance has a lot of really cool things. He's sending out the newsletter. If you've been getting the newsletter, that's probably something that we should look into also if we don't already do that. Okay, thank you, Claudia. Thank you. Are there any questions? We're right at 6 o'clock. And so if there aren't questions, I appreciate you guys being here. I love coming on. I come on every other Thursday and every other Monday. So I'll be on next Monday. So it's Thursday, then Monday, and then about 10 days goes by, and then Thursday and Monday again. And super excited to come on and teach you my experience. This is my life, what I went through, and I can look back and say, wow, November 1st of 2014 was the day I changed my life. Okay. Thank you, Kevin. I appreciate it. Awesome. So if there are no more questions, if there aren't any questions, guys, once again, believe in your future. Start making decisions that enhance the compounding effect in your life, whether it's your life, your health, your wealth, your business. Make little good decisions over and over and over. Stack wins. That's all you need to do is win. You don't need big wins. You just need to be consistently winning. And when that happens, compounding in general enhances everything in your life. And that is how we ultimately achieve the freedom we're looking for. The freedom of time, the freedom of health, the freedom of everything. So thank you again, Enrique. Thank you. Thank you. I already have a policy with you guys. Awesome. Thank you, Dennis. Well, until I see you next time, have an amazing day. Have an amazing night. Go make a great memory with someone you love. Until I see you next time, I'm Curtis Ray. Always be triple compounding.